The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour, Monday, Tuesday, Wednesday, Thursday, Friday. At this time, my pleasure to be here. And my pleasure to be following Steve Rhodes. Great 2 hours as always. Today being Wednesday, we're going to have Larry Pesavento following me. And I will be doing the 3 o'clock to 4 o'clock show today. And got a surprise for those of you who haven't been listening yesterday, hadn't been listening. If you're in the San Francisco area, let me just put this up right now. There we go, Tiger, TFNN. If you're in the, right there, San Francisco, free live workshop, Basil Chapman, 2-hour live workshop. It's going to be called The Tide of the Market, how you identify tides. What techniques can you look at in the different sectors that we'll be looking at? I believe that we're getting to a very, very vulnerable period in terms of some of the sectors that have had absolutely phenomenal runs right up until yesterday and today. So that's going to be at the Marriott Marquis. Look, you go to the front page. You go to San Francisco. It says San Fran Free Live Workshop. It says Basil Chapman 2-hour live workshop. It says San Francisco, April the 10th, the Tide of the Market. That's a week from today, 6 o'clock till 8 p.m. And in that period, I want to meet folks. We've already had a lot of people. Gee, that was quick. A lot of people signed up. I really need for you to sign up. There is a huge convention going on, and I was really lucky to get space in the in the main ballroom. Why am I missing the name? And I've got a space. I got a room, and I managed to squeeze that in. I'm on vacation actually. Wife's at a conference there. And but I will be doing my shows, and I'll be doing my newsletter almost every day, I believe. But I did want to do this because so many fabulous callers that call in from San Francisco area, got absolutely fabulous listeners. I just think it's a real nice thing to be able to meet you and for you to ask questions, look at my work a little closer, ask me questions about my techniques, etc. I'm really looking forward to it. So that'll be a very special event. It was unusual. I wasn't going to do anything. I got some good friends. I promised I'd spend time with them. But you know what? I'll begin the Tuesday night. Wednesday night's fine. I'll use that first night, the first day and night, just to settle in and take a break after that. So I'm looking forward to it. But go to the front page of TFN. It's really important that you sign up to be able. So I know you're going to be there. I'm also going to give away a free CD. That's a $249 value, just as kind of a thank you, just a surprise kind of a lottery, and we'll figure that one out. But most importantly, I want to see you. And I'm looking forward to it, of course, otherwise I wouldn't do it. And you go to the front page, you'll be able to learn more about it, and there you'll just be able to sign up. I need to know who's coming. It's important. It's important for a number of reasons, and mostly it's important because I need to tell the hotel, who's made a special effort to set up the seats and everything. They've really been gracious about this. How many people are coming? So thank you very much for those of you who signed up. And my engineer L says, hurry up because this event will sell out. I have no idea if it will sell out, but obviously there's going to be limited space. It's really important that you do let us know. Now, let me do a couple of things. I just want to run the numbers. The Dow's down 68 at 40,593. Actually, I think I'll do this together. What you're seeing if you're looking at Tiger TV is that you'll be able to see that on the left here is a daily chart of the E-minis, the S&P futures. This is the June. And because it's 1 quarter, that is 25 cents lower than yesterday, the high today so far, 1567.75. This could very well turn into a peak F. I'll discuss that as we move on because I'm going to show the Dow, etc. The 120-minute chart made a double top in peak E with a cup formation, and the key level to hold and not break, and it looks like it will break, is 1552.50. It's down 1553.25 is the low so far. It's at 1554 right now. Now, this is going to be quite important. Let me go to these charts. And I for my subscribers, I spent quite a bit of time writing up a report on the Dow daily. Of course, I always do, but the weekly and the monthly, as well as the S&P, with a lot of information. What I'm looking for, why I'm looking for it, etc. But here on the Dow, we've got the exact same thing. We've got a leg F, which is possibly a peak F, because 14,684.49 was the high of yesterday. There's really very little chance at this point today that I can see us taking out that high. And the high so far today is about just over a point lower. So that says, be careful, because if the Dow closes decisively under 14,554, it's at 14,594 right now, 14,510 will be the next level of support. But if the stochastic, which is at 87%, and remember, I've begun over the last many months, because it's an unusual pattern that's been forming, but I've seen it in enough charts, I'm beginning to give a lot more weight, W-E-I-G-H-T, even though there's W-A-I-T involved, to the MACD being negative, even if the stochastic is rallying. What it's saying is, yes, you could get these minor pop-ups, but as I said to subscribers this morning, we are getting closer and closer to some kind of a top, and I don't know yet whether it's a top of consequence. For a long time, I was talking about, a very long time, I've been talking about the peak that is made in this particular phase coming up in the weekly chart, and the weekly's made new highs, so that means that you cannot get a confirmation of a peak until Friday a week. You have to have a whole bar to do that. But most importantly, and I'll go through it in a moment, is that the stochastic is still at 87%. So it says that there could be residual pop-ups, but the tide in the daily is starting to change, not the weekly yet. And what I was thinking is that the weeklies would make some kind of a pullback. Dow goes, at this point, I would be looking at 14,300 or so, somewhere around there, maybe a little lower. And then it makes another leg up in the weekly. And that leg up in the weekly takes the S&P and any others that have gone to leg D to a leg E, as the Dow actually makes its leg D, official leg D, unlike the diamonds, which are in leg D already. I don't want to make this too complicated because there's a phantom peak already. But most importantly, what I've been looking at, now I'm beginning to hear a couple of people on CNBC and others talking about what I'd been saying for a while, is that there'd be a single-digit pullback, and then we have a strong move up, and that gives you a powerful double-digit move to the downside. I'm going to just let the market tell me, based on what I'm looking at this particular point. If this really is a peak F top, we have plenty of time. You can go short at any stage because it should have time and price to the downside, and then you have to deal with whatever you get for a buy signal, how that buy signal kicks in. So let's go on. We're looking at the S&P right here, the S&P SPX, which is in more ChapmanWave synchronicity in that it's making a peak E in the daily, but a leg D in the weekly. And that says, okay, MACD is very strong, stochastic's very strong, unbalanced volume says you better be careful, relative strength says better be careful, monthly chart is looking great. The daily is saying be careful here as well. The MACD is turning down, and the slow stochastic is still at 83%, getting closer to the 80% level, but the unbalanced volume is not all that good. So I'm looking at the S&P and I'm saying, fine. At this point, either way, I'm looking at limited upside, just at this particular stage. This stage means 3 to 6 days. I'm looking at limited upside, while simultaneously I'm looking at the degradation of the MACD, a very important indicator and tool in my work, saying unless that turns positive, any rally in the stochastic will be temporary. Okay, let's get that out the way. Now let's go to the Qs. 1, 2, 3, and we'll go to calls straight after this. Peak C in the QQQ series, but it could in fact be D. I forgot to put that in. That's really what I meant to do. It could be D/D/C. Now, what's really important about this? Yes, Apple is really a great part of the Qs. The 9-period moving average in the weekly is being held at 68.21. Close below 68 would be very negative. Apple is still very important here because it is trying to rally. It's up 491 at 434, and I suspect it's trying its best to get to 441. That's the 9-period exponential moving average. Then we've got to reassess and see, is this going to turn down again or will it go a little higher? IWM, which is the Russell 2000, so QQQ is based on the index 100. Horrible candle, down 0.94%. Right on, just about on the 50-period moving average. Most importantly, no, that's not the 50. That is the 50. 50-period moving average. But the weekly chart says, I've broken the key support level. Now, the week it's not even halfway over yet. So this is a heads up to say, sector by sector, we're looking at overbought levels. We're looking at levels that have already begun to turn down, and we're looking at certain stocks that have internal strength that are able to help that particular sector, but fewer and fewer and fewer are doing that. And what I said to subscribers this morning, there are a couple of sectors that are on my list that I suspect are going to give a real sharp pullback, and we hope to be able to short them. Now let's quickly go to, so gold is acting quite okay here after a horrible couple of days. It's down 3 at 1572. The GLD now has made the U-turn, and it is close to testing the left side low. And I suspect that, it might have a little balance, but 151.40 is going to be absolutely key. If it breaks that, then 150.84 is the left side low bar. We're going to monitor closely. If there's a rally in the GLD to 153.96 over the next 2 days, that'll say, hey, successful test of the M pattern. That's the pattern I drew ages ago right up there, which is exactly what you're looking at. And we will follow that very closely. We've got silver is a little bit, was a little down, 0.08 at 27.16. Platinum's down. High-grade copper is at 3.34. Not good action at all. Crude oil is down at 95.82. And we've got bonds up 21.30 seconds. So let's go to the TLT, and then I'll be all ready to take calls for those patiently waiting over there in the wings. The TLT, 118.77, 118, has just started leg D up. Now, this is a very interesting thing because it is in a buy mode, having gone to the requisite leg D. It's helping the weekly chart, and we'll need to talk about that more, as well as the volatility index. And I'll be back with our callers straight after this. Basil Chapman, Dow's down 60, S&P's down 10, 877-927-6648. Love to take your calls.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians. My pleasure to be here Monday through Friday at this time and to take your calls at 877-927-6648. And right online, we have, let me just double check here. I guess something got changed in my set. I think we've got Mike. Is that correct? Yeah, Mike in Long Island. Hi, Mike. How are you?
Good. How are you doing?
I'm very well, thank you.
Excellent. I want to look at Las Vegas Sands, and do you think that's a hat-trick top? Could one just short that and walk away for a couple months, or
okay,
get
folks,
your opinion on Las Vegas Sands?
Yeah, it's a good question. Because let me go through this. We're looking at LVS, Las Vegas Sands Entertainment, gambling entertainment. I've got it here, but they call it something else. I can't remember. Entertainment. I think they call it just entertainment. The question now is, in the monthly chart, there was the two candles that were forming in March of 2012 and April of 2012, exactly a year ago, at 57.10 and 59.34 are very interesting because both of them say that there's a chance that if there was a pullback, although this was deeper than normal, there could be a retest of the actual candle, the wick, the body of the candle of March, which opened at 53.54 and closed at 54.82. It's a form of a doji. It's a little wide, but it's a doji, but with the long legs. And what happened is at this time, the price went to 56.83. So it actually did test it, but it didn't break to the new high, which is 59.34. 59.34. 59.35 would have been an all-time high. So this is, let me just say, I said all-time high. No, not all-time high. All-time high, I knew there was a problem. That was a huge doji at in October of 2007 at 146.01. And it really, wow. Don't tell. What was the low? Do you know? I've got minus 1.37. Of course, it never ever did go to minus.
Yeah, that's right. Yeah, it almost went bankrupt.
So it actually went. It really did go minus 1.37. Wow, yeah, that's unbelievable. So it's gone. It's 53. It's a 53,000% gainer or something, right?
That's correct.
Unbelievable. All right. So let's look at this. What's the name of the guy that runs it? Owns it?
It's What's his name? He's originally from Boston.
Boston, right.
Adelson.
That's right. I've heard tons and tons of stories about this guy. It's quite a character. So now the question is, there's a technique that I discuss every once in a while. It's called the Groucho Marx eyebrows. And basically what it looks at is it's like a pattern that I love to look at. It's got the eyebrows over there if you're looking at Tiger TV. And it goes down to the nose. And it hasn't got the mustache, but it bounces back. And that fails, and it's like a V-shaped pattern. And that V-shaped pattern is, and the reason why I thought about it, it's got those thick eyebrows, and if you can put them in there, it makes the pattern look great. And what happened was, it failed just underneath the previous high, but the MACD never did go to 8%. It's at 76%. That's number one. Number two, that's the stochastic. The MACD did rally, but it wasn't even close to being as strong as it was the first time that it went to that high in 2007. So technically, the monthly is saying the month has only just begun. I can't talk about the candle until it closes. I can only speculate, and the speculation is that if it closes somewhere between 48 and 51 in April, that will say yes, that's the pattern, and that you can see a test of 43, the 200 period moving average right there, at some point in the summer. But now we go to the weekly, and the weekly has a kind of cup and handle, and the handle was a little higher than the previous slip, but not even close to the previous high of 59.34. Now, this is the pattern that says if the price pulls back deeper than 1/3 to 1/2 of the cup from the lip, the previous lip of 59, was that 59? Oh, there's even a round number there, 55 round number open the week of the 13th of April, and the low of 31.97. There's a really good chance it's going to go all the way down to test the most important trough, which would be the first one. If it goes under 41.70, which is a 200 period moving average, would be 37.53. It could even go lower. That, to me, is taking a picture and really pushing the envelope, because I have to go step by step. And it hasn't yet crossed negative in the MACD, and the stochastic still is at 82%. So I've got a real nice picture in my mind, exactly what I want to look at. I'll give you the summation. I'll work on it during the break. So for those of you in the den, you'll see I'm working on it. And I'll be right back with Mike, Freeman, and Mark straight after these messages. Down 50.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. Tiger Technicians out. Dow's down 67. S&P's down 10. And the dollar is down 21 cents. And that's going to be very interesting to watch. We're going to see if gold is able to make a bit of a move here. Doesn't look like it's real tough for gold, man. There's a downtrend, the tide. I'm going to be talking about tides when I meet with everyone from who's listening to TFNN and wants to come to the San Francisco Marriott Marquis a week from today. It'll be in the 6 o'clock to 8 o'clock time frame, Wednesday evening. I'm really looking forward to go to the front page of TFNN. Please sign up so that I know that you're coming. Sure, if you come and you haven't signed up there, that's fine, but you might not get a seat. So let's go back to Mike from New York, who wanted to look at LVS Las Vegas Sands. Mike, I think this is a real easy trade.
All right.
And I'm going to talk about it as a trade. I'm going to say to you, do you have any short position now?
Yes, I do.
Okay. So you have a short position. I'm going to suggest that you increase it just a tad, even here on a down day, 3 ugly candles. You could have a bounce tomorrow. That's fine. But it doesn't have to be at this point at 53, 56. Although my suspicion from the chart pattern that's unfolding is it's going to go real quickly to the 52.50 area, about a point low, and then bounce. But that bounce might not be too high. That's the reason why I would say to you, number one, The monthly chart I have to let play out. I think your concept of this V-shaped pattern with the double top is absolutely correct, but it's early in the month. The weekly chart is suggesting, and it hasn't done it yet, that if Las Vegas Sands closes under 52, the MACD fast-moving average will then cross down, and that'll give me a peak F with a little cap on top. Actually, it'll be the first time I can actually put that's interesting. That'll be the first time I can put, I'm going to call it F for now, but a little inverted, that caret on top, or even a down arrow, because if the MACD closes negatively, that'll confirm it. And the stochastic will probably be underneath 80%, and that's what you want. And then any bounce should fail somewhere in the 54 to 55 area. So I would say that any position that you add right now, that one can have a tighter stop. If you're short from us a little higher up, that's different. And then that one, I would put a stop above 56.83, which is the high. You can make it, I would even put it 57.10. Just give it a little bit of room. That's all you want. And that would be for an outside chance that it's running. Everything about it says that it looks like it's going to take a breather, but it could land up going into a rectangle formation with the 49 to 47 area as holding a support. So number one, you'd love for it to go down the 5 points. That's great because it gives you a good cushion. But at the same time, I think the upside is limited. So I would start off with a negative position, with a short position, only when it gets to around about, if it gets to the 47 to 46 area, will the monthly chart be saying, okay, this is it, tough time, it's going to go all the way down to 43. Let's go step by step, okay?
Yeah, sure. Okay. Thank you.
Thank you very much for calling. Let's go to Freeman in Dallas. Hi, Freeman, how are you?
Hey, Basil, how are you doing today, sir?
Very well, thank you. How are you?
Pretty good. Hey, Basil, I know you are in the newsletter, you're expecting that a general market, or you can stop me if you think I'm generalizing wrong. You're expecting the market to correct.
Yes.
But I was looking at some stocks. I was looking at housing, like Toll Brothers and Lennar.
Looking bad.
They look, but they look like they're almost oversold already. If you look at the slow stochastic, and I was looking at TX this morning. It seems like it's already oversold, and I was thinking about doing a buy here just for a bounce. What do you think?
You know, I don't think I want to play any bounces right now because we've had so many bounces for weeks and weeks and weeks and weeks. I suspect that what's happening right today, as I'm looking at the market, I'm following it real closely. I'm looking at buyers trying to climb in to do that, to play the bounce, and I don't see it working. I see, for instance, General Electric yesterday, as you know, the day before, 2 days ago, it pulls back, then it rallies, and then yesterday it looked kind of okay, and all of a sudden it gives it all back again today. I'm looking at only UTX, my pilot light indicator, is showing strength right now to the 4 of my Dow Horseman, and I'm suggesting that this is the one time that I don't think I want to play bounces because the pullbacks, I suspect that the pullbacks are going to start making lower lows and lower highs. If I'm wrong, then you're correct. Then TEX, which is TEX, Terex Core, which is what you're looking at. I've got a peak F in the weekly. I've only got a peak B in the monthly, but the daily chart says I've made 2 arch formations going to a peak E in the ChapmanWave. There's a real good chance from the power of the MACD and the stochastic that even if it tests successfully the 30.59 area and it bounces, I don't think you want to play a 75 cent or a $1.30 bounce with the risk that the next morning it gaps down. So I'm going to suggest that the upside at this particular point is limited because the weekly is saying it's had a spectacular move. It needs time and some more price. So I'm going to suggest hold off, have patience. You know, I've been patiently waiting with these home builders to get back in. Peak F top in Lennar, I spoke about it the other day. It was about 41.70 or 42.10. It's now 38.77, and peak D in the weekly chart. Possible even peak E in the monthly. Toll Brothers made a peak E in the weekly. I've got this as a peak B in the monthly, but look at that double top in the weekly. If you're looking at the chart, I'm going to say to you, yes, there's a chance for a bounce, but I don't think this is a bounce that I want to risk because I think it's limited on the upside, and there's the chance with the market the way it is that pullbacks could be coming in the morning and seeing your profit almost taken out so that it's almost impossible to get out comfortably. That's really all I'm worried about. So I'm not worried about missing the upside right now because I think upside is going to be very limited. I'm more concerned with getting trapped in the wrong position on looking for a bounce. So I hope that helps you, Freeman. It's sitting, so I just wanted to say that TEX, Terex core is within, it's at 30.97, so it's within 20 cents of a key support level, and the MACD is still very wide, and the stochastic is just plunging to the downside. So even if it touches it, it needs a little time to be able to form a base for a bounce.
Gotcha. Thanks a lot, Buzz. I appreciate that.
Thank you, Freeman. Thank you so much for calling. Thank you again for being a subscriber. Let's go to Mark in Fort Collins. Hi, Mark. How are you?
Good. How are you?
I'm good. Thank you.
Good. Hey, so I'm going to give you an either or both here. What do you think about shorting AutoZone or Panera? What looks better?
Off the top of my head, I would say AutoZone, but let me just jump to Panera. Panera leg D up today, a big spike. Let me see. What's CMG doing? It's up a little bit.
CMG spiked back up to 330 today, I think.
Yeah, I'm going to make the suggestion. Are you going to do it via a put or the actual position?
I'll probably do a small number of out-of-the-money puts.
Okay, I'm going to make a suggestion right at this particular point. Think about it. It's just it's your money. It's your trade. I'm making the suggestion that says, how about you go? It's more expensive, so you might not be able to get as much as you wanted. How about you get closer in the money for the AZO? And I'll explain my reasoning. The MACD in the weekly is very strong. The stochastic is rallying. On-balance volume is getting almost to an overbought level. But that says that there's limited downside, even though on the daily you could have a real nice pullback to 389, 385 for options. That'll be great. But if it just hangs out here above 395, it's at 397, folks. We're looking at AZO, AutoZone. This is auto parts, truck parts. You might find that, in fact, it doesn't pull back the way you want, number one. Number two, there's a beautiful left side, right side of a potential head and shoulders later on. And that says that the 389 to 390 area, 388 to 391 area could become a nice bounce off place. So there you are, you've got it, it looks great, and then suddenly it pops up, and then all that happens is you're going to see your premium shrink. And we're in the business here of looking at premium. So I don't want you to lose the premium because you could be 100% correct on the trade, but by the time it works, it's not going to. In fact, by the time it works, you could see a tremendous decrease in the premium. So think about that, because it's more important to make a profit, doesn't matter how big or small, than to see a small loss start to get into a bigger loss. And then what happens with options is very often we just say, we give up and we say, you know what, it's not even worth selling. I don't want it to get there at all. And that will happen if you go to, say, the 385 put or lower, and this thing just hangs out here. You're going to see your $7, whatever it is, or $9 stock shrink down to $6 or something. I don't like that. So that's my suggestion. Now, here's the other thing. Panera is getting close. But here again, in this case, it's the exact opposite. The monthly is weak, but it's almost trying to test its all-time high. Right. And the weekly is turning positive, but it isn't great, and yet the price has rallied. So it's walked the 9-period moving average. It's telling me that within the next 2 to 3 weeks, I'm going to get enough signals in Panera to say, and I suspect that this is what we're going to be looking at together, that it's ready to turn down, and it's ready to turn down quite sharply. But I don't know. It's in leg C with a bounce in the weekly chart, and that it really looks like it wants to test 175. Folks, we're looking at PNRA, Panera Bread, trading at 171. It's only got 4 or 5 points to go, and then it's at an all-time high. And you know what happens if it hits the all-time high? I have to rename that to leg C in the monthly. Well, I can say G/C, but G's and monthlies are extremely rare. So I don't think I want to short Panera right now, even though it could pull back quite quickly. I would rather you look at AZO, and then again I would do it. And here's the other thing: if this doesn't work real quickly, I just get out.
Okay.
So there it is. Thank you, Mark. Thanks for calling.
Thanks. Bye-bye.
Okay, good. That was Mark in Fort Collins. We were looking, folks. We have callers from all different spectrums. I can often tell by the voice if someone's looking at a stock that's fallen from 13 down to 5 and is having a nice bounce, and they say they're in it, and I think they just got in it, but in fact, I could tell by the voice that they've been in it all the way down, and now they're just trying to get out at a profit. There's a whole different mentality, and I treat it completely differently than someone who's got in with a nice profit, fresh, clear thinking, making money. Then we treat that differently to saying, there's this finger sitting on my shoulder, wagging and wagging and wagging, saying, you didn't put your stop, you didn't put your stop. And it just haunts you. I hate that. So there's a different attitude. So we've got callers who do the options. We've got callers who do straddles. I always have to lead them to our wonderful options show Tuesday at noon, straight after my show on a Tuesday. With Victor Jones or his cohorts, and they have fantastic strategies. And then the people now, more people are starting to do what Tom and Daryl Martin discusses in his strategy, the way he works the strategy with the boxes. And Tom, and let me just show you here again. I've got my workshop presentation coming up in San Francisco. I know that Tom and Daryl were in San Francisco. They're going to be in the Boston area. Join Tom O'Brien and Daryl Martin in Dynamic Trading Strategies. I think it's May the 11th. Let me just double check. It'll be May the I haven't got it. May. Yes, May the 11th, Saturday, May the 11th, 8:30 to 12:30. It's free. So there's another way of looking at strategies. You know, you listen to Steve talking about his candles. How he's got the strategy of looking for the candles, the sash. He's got all these different kinds of candles that he looks at. I happen to only look at a few that for me are very, very important. But if you use candles a lot, you develop your whole, the emphasis becomes on the result of each candle. So, and you've got Dave White, fabulous strategies. You've got when Larry Pesavento comes on and he talks about the Gartleys and the butterflies and they hit on the button, you just marvel. You say, what a beautiful technique. So we're all about techniques here. And what I'm suggesting right at this moment is that there's still residual strength. The technique that I'm going to try to use, I hope I can use it correctly. I should have done it today purely on a technical basis, was to go to the to short the Dow, because there was a chance that it was a peak F top. But you know what? I'm seeing so much strength in my weekly chart that I suspect we can just hang around here at the highs a couple more days. If I'm wrong, well, it's fine, because we've got quite a bit on the downside to go. So it would have been great to step in today right at the top. It would have been a point of the top if you went right at the opening. But that's not the issue. The issue is to get the trend. And right now what I'm saying is there's enough strength to say the S&P could hang out going towards the highs just a little longer. I'll be right back after these messages. Basil Chapman, Tiger Technicians Hour.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Dow's trying to come back, down 54. S&P still down 9. And we're going to go to our next call. Oh, just before we go to our next caller, sorry, Victor, hold on. I was talking about techniques. And then it struck me that, we all have different techniques. And I think it was Tom had spoken about this. I remember hearing talking about it a long time ago, and now it's in the ad on Tom's performance. And he spoke about warrants. He had a warrant on a long time ago. I think he spoke about, I think it was AIG, and took great gains on it. Now there's the thing. That's like a long-term option, a warrant. It's like a preferred. When you think of bonds and stocks, it's like a preferred share. So, yes, everyone's got these great techniques. Congratulations. So, let's go we've got Victor in Paramus, New Jersey, who wanted me to look at a stock. He couldn't hold on. So I'm going to go to X, which is USX Steel. So this is US Steel Corporation. This is, when they talk about dogs of the Dow, or whatever it is, this is a real dog. It was $196 once upon a time. That was back in 2008, I think it was. And then it drops down to, $18.60 has a peak D. That was a peak D top at 196, round number high. It goes to 70.95 in April of 2010. It comes back, it retests the 18 level in October of 2011 for the H pattern that I always talk about, the arch formation. What does it do? It has a tiny little bounce and then another bounce, and now it's down at $11. I'm sorry, $16.87. I wasn't 11. $16.07. I thought about this a lot recently. I thought, how can this be so bad? Surely we should buy it at this level because it's making... Well, you know what? Think of it this way. Look at the stock here. Let's go to UNH. It's got the same pattern but upside down, and it's making all-time highs. So what are we doing? Stocks that make all-time highs tend to continue doing that because money managers want to buy the best. When you go into a store, you want the best. You're trying to get a discount. If you don't, you have to pay up. That's exactly what happens. And on the way down, nobody wants it. And then it becomes the best of the nobody wants it. So not only doesn't anybody want it, but every time they buy it, it goes lower. So the more I thought about it, I thought, no. It could be a stock for later in the year, but I'm going to just step aside for now. If I see signs, maybe a round number low, what's the low today? 1687. Look at the weekly chart. The weekly chart, MACD and stochastic are still very poor, except the stochastic is getting close at 8% to at least flattening out. Now, the question, I suspect the question is from someone, Victor from Paramus, New Jersey, who's looking at a stock and wants a stock, and he's looking at it not just as a bounce, but a potential turnaround. And I'm going to suggest rather wait for everything to go into place than buying. We used to have someone in the den who used to sell the gloves, the special iron gloves for catching a falling knife, Bob. And all I can say is, not only do you need a glove, you need some kind of some alloy. You need something that is really going to make sure you don't cut right through, because this thing is not looking good. However, there's one good sign. This is the sign I was looking for. The smash through the low of 18.29 from the 5th of September last year. If this bar manages to reverse, I'm looking at a volume. No, not today. It was yesterday. Yesterday was the opportunity. There might be a volume turnaround. It's getting close to a bounce, but I'm going to say hold off. I'll look at it again today. I'll look at it again maybe Friday, but I wouldn't do anything right now, even though this could be a perfect time to buy. It's just too dangerous. Stay tuned for Larry Perseverance, and I'll be back at 3 o'clock till 4. Sitting in at 3 o'clock to 4 before Tom's show. And thanks for being here. Otherwise, I'll see you tomorrow, usual time.